Xi Jinping remains the General Secretary of the Communist Party of China and President of the People's Republic of China, as well as Chairman of the Central Military Commission. His leadership is guiding China's policy decisions and long-term planning. Donald Trump is serving as President of the United States as of late 2025 and continues to conduct trade and diplomatic engagements with China. He has publicly indicated a broad plate of demands regarding trade, tariffs, and supply chain issues. For example, he stated, "I think we're going to end up having a fantastic deal with China." In the economic domain, China's economy recorded a year-on-year growth rate of 4.8% in the third quarter of 2025, down from 5.2% in the previous quarter, the slowest pace in about a year. That slowdown is attributed to weak domestic consumption, a property sector drag, and intensified trade and technology tensions with the United States. China is holding important internal meetings, including the fourth plenum of the Communist Party and efforts to sketch out its 15th five-year plan, covering 2026 to 2030, aimed at shaping the medium-term structural trajectory of its economy. On the US-China bilateral front, the US administration has threatened steep tariffs, including proposals of 100% or more, on Chinese goods in response to China's export control policy on rare earths and other strategic sectors. With those updates in mind, here is the rewritten piece. Latest official figures reveal that China's economy grew by 4.8% year-on-year in the third quarter of 2025, the slowest pace for about a year, as domestic consumption remains weak and trade tensions with the United States escalate. The data coincide with the launch of a four-day closed-door meeting of the Communist Party's leadership, where long-term economic, social, political, and environmental goals are being set for the country's next phase of development. China's growth slowed in the third quarter of 2025 due to falling domestic consumption and trade tensions, the National Bureau of Statistics said, referencing the 4.8% figure. According to the Bureau, growth in the July-September period was down from 5.2% in the previous quarter. The timing of the slowdown is significant. The leadership's meeting comes just ahead of anticipated negotiations between senior Chinese and US officials, which could culminate in a direct summit between President Donald Trump and President Xi Jinping. Analysts say the slowdown reflects deep structural challenges in China's economic model. For years, rapid growth depended heavily on infrastructure investment and exports. Now, the country is increasingly tasked with rebalancing toward greater reliance on household consumption, a shift that is proving difficult. Despite policy efforts, domestic spending has yet to recover fully from the pandemic shock. Retail sales growth has cooled, and investment in real estate, once a key engine of growth, is now a drag. The property sector continues to show signs of strain with falling home prices and shrinking investment flows. On the trade front, Washington's pressure on Beijing is intensifying. The US has signaled its readiness to impose tariffs of up to 100% on Chinese goods starting November 1st if Beijing does not remove export controls on rare earths and other strategic materials. Chinese export restrictions, especially in the rare earth sector, have provoked strong responses in Washington, adding risk to China's external demand outlook. Chinese exporters are meanwhile confronted not only with tariffs but also with weaker demand in the US market, rising competition in overseas markets, and pressure to move up the value chain into higher-end manufacturing and services. Against this backdrop, the Communist Party's leadership meeting is being closely watched by investors and policymakers. The gathering kicks off a period of high-stakes deliberation over China's economic trajectory, including the drafting of the upcoming 15th five-year plan, 2026 to 2030. The agenda is expected to place emphasis on high-tech manufacturing, self-reliance in strategic sectors, and boosting domestic innovation and consumption. Observers note that the meeting signals how Beijing views the current slowdown not just as a short-term hiccup, but as part of a broader transformation of the economy. The leadership appears to accept that the era of double-digit growth is over, and that the next phase will be defined by slower but more sustainable expansion. While the headline growth rate is 4.8%, the underlying details are more nuanced. Industrial output continues to outperform, and international exports remain resilient in some sectors, such as electric vehicles. but fixed asset investment, especially in property, has turned negative or near zero in many cases, and consumer confidence remains muted. The official annual growth target remains around 5% for 2025, a level that Beijing had set at the start of the year. While the current quarter's slowdown complicates the path to meeting that target, Beijing retains some policy leeway. The question now is whether the government will ramp up stimulus or accept weaker growth as the new normal. China faces a delicate balancing act. On one hand, extended weakness in consumption and property could undermine confidence, generate higher unemployment, and slow growth further. On the other hand, overstimulating the economy risks reigniting debt accumulation and structural inefficiencies. Beijing's policy tools may include additional fiscal spending, tax relief, targeted credit easing, and support for consumption. But some analysts caution that without meaningful structural reform, for example, loosening state-owned enterprise dominance, liberalizing markets, and reconfiguring the property sector, such measures may only produce limited results. In the coming weeks and months, key indicators will include consumer retail sales growth and household income trends, property sector investment and home price trajectories, export performance, especially to the US, Southeast Asia and Africa statements and policy guidance emerging from the leadership meeting, particularly about the 15th five-year plan, US-China trade negotiations, and whether any tariff escalation or de-escalation occurs. The outcome of these dynamics will shape China's growth trajectory heading into 2026 and potentially influence global trade and supply chain patterns. He said China's growth slowed in the third quarter of 2025 due to falling domestic consumption and trade tensions. He said, according to the National Bureau of Statistics, Chinese GDP for the July-September period grew 4.8% year-on-year, down from 5.2% in the previous quarter. He said, the figure coincides with the start of four-day closed-door meetings in which the Communist Party Central Committee began defining China's long-term economic planning. He said, as trade pressure from the US increases, experts say China must move toward an economic model in which domestic consumption plays a greater role, rather than relying primarily on infrastructure investment and exports. He said, domestic spending has lagged in recent years, having not fully recovered from the COVID-19 pandemic. He said, Trump threatened earlier this month to impose 100% tariffs on Chinese goods starting November 1st in response to Beijing's sweeping export controls on the strategic rare earth sector. He said, all eyes are now on the results of the Communist Party meeting, which is expected to conclude on Thursday with the development of a plan outlining the country's political, economic, social and environmental goals. Each of those statements is retained verbatim and in bold at the beginning of the relevant paragraphs or sections. China's economy is at a moment of transition. The current deceleration in growth is not just a cyclical lull, but appears to reflect deeper structural and external headwinds, from weak household consumption to trade friction with the United States. As Beijing convenes its leadership meeting and sketches out its longer-term economic blueprint, the balance between maintaining growth, reorienting the economy, and dealing with global pressures will be critical. How China navigates these challenges will not only determine its own growth path, but also ripple across global markets, supply chains, and geopolitical alignments.